Mr. Sanjeev is the lead manager for Franklin India Blue Chip, Franklin India Equity Advantage Fund, and co-portfolio manager for Franklin India Technology Fund. So he'll give us some technology that we need to adapt at this point in time to handle the technology stocks. And Mr. Sanjeev has been an investment management industry since 2007, and he started his career with FT, Franklin Templeton, in 2021. Prior to joining Templeton, he worked as a senior investment manager and asset management from London, where he was the co-lead, and also worked with portfolio managers of ICICI Prudential AMC, Edelweiss. And Mr. Sanjeev earned his postgraduate diploma from IIM Ahmedabad, and he obtained his chartered accountancy from Chartered Accountants of India 2004, and he has just paired MBBS and law as a graduation. Let me introduce Mr. Sanjeev. Thanks a lot. I hope this heavyweight champion will give some light punches for the light-hearted MFDs.
You're calling me only in the previous session. Thankfully, I could have made an interesting presentation like what Mr. Venkatesh just made. So, thank you. Good evening. And the topic about large caps. Large cap as a category. But just as a bit of a background, I joined Franklin about 3 years ago. Mr. Venkatesh must have worked in Kothari Pioneer in 97 when it was before Franklin times, but at some point we must have been in the same company, in the same building maybe at some point of time. But so I joined about 3 years ago, and I'm from Chennai itself, and I was working in London, one of the firms called Pictet Asset Management. I had this conversation with my boss then, and there was this chance to come to Chennai, my hometown, and chance to manage the Franklin Blue Chip Fund, which has also got a fantastic legacy, 30 years of history. Just like the previous speaker on Nippon spoke about Nippon's fund also having a long history. In the fund, a very, very long history. For a very long time, the fund had an excellent track record. In between, there was some phase when it lost a bit of momentum. And another objective after coming back here is to rebuild the momentum and get it back into all of your minds and to explain to you what we are doing in the large cap category. So that is the background. Large cap in pesumbodu macro is very important. Number entire market there is a global events sort of role is very, very important, and all the more important for large cap category. So I just spend over 2 or 3 minutes in very simple terms what is happening in the US markets and what is happening with all the tariff and all these things. Many of you may already be aware of this particular events, but I'll just to set the context, I'll tell you. The Nippon speaker also spoke about how Indian rupee keeps depreciating every year. The exactly opposite problem is with US currency. US currency is very strong. If you see for many, many years, US currency, it has been extremely strong. And like how he spoke, that rupee depreciate ana, it is good for our exports. Nama exports, earlier it was going at 50 rupees per dollar. It is going at 85 rupees per dollar. So it is good for our many businesses. So on the opposite side, American dollar is very strong. So it is bad for American exports. Edukku American dollar romba strong ah irukku? Adukku main reason is American dollar is a reserve currency. Maybe global reserve currency, reserve currency, what is the meaning? Reserve currency, every country uses dollar to trade. If somebody is selling something from India to America, we get money in dollars. If there is a trade between America and Britain, the trade gets settled in dollars. Even when America is not involved, if there is a trade between Argentina and let's say Poland, adliyum dollar use pandranga. America is not even involved. So ella edathiliyum there is a need to use dollar. And that is the reason why it is a reserve currency, because and the currency is very, very liquid, plentifully available. And adanala America a lot of benefits. Enna benefits na they can keep on printing. They can keep on printing more and more currency because yaro engyo vaanginde irukka. Some Chilean guy is buying, some Polish guy is buying, engyo vaanginde irukanga. And they can keep printing without causing too much problems for for their domestic economy. India la panna mudiyadu. And if you keep printing rupees, who is going to buy? It will cause a lot of problems domestically. But America can do it. So they can keep on printing money because they are the reserve currency. The other big benefit of having reserve currency is American government can use it as a weapon. இந்த காலத்தில் weapon can be guns, can be tanks, it can be internet, it can also be currency. அப்படின்னா என்ன, if tomorrow Russia, which already happened in this past, Russia is causing problems, America can come and say, I will cut off your access to US banks. You cannot trade with US currency. So Russian economy will get impacted. So Russia cannot use their dollars, they cannot trade with other countries. So it is a big strength for US to have that as a reserve currency. So hypothetically, there's no other country in the world which can potentially take over US as a reserve currency. ஏன்னா US economy is almost 25% of global GDP. அந்த மாதிரி வேற எந்த country அவ்வளோ பெரிய சைஸ்லையும் இல்லை. And the trade which happens in the world, almost 70% or 60% is US currency. So there's no other country this size, this scale, and with some rule of law. Chinaலையும் scale இருக்கு, பட் இந்த மாதிரி ப்ரெடிக்டபிள் டெமோக்ராட்டிக் ரூல் ஆஃப் லா இல்லை. இந்தியாவில் டெமோக்ராட்டிக் இருக்குது, பட் ஸ்கேல் இல்லை, டெப்த் இல்லை. ஸோ ஃபார் த ஃபோர்சியபிள் ஃபியூச்சர், வாட் எவர் நெக்ஸ்ட் ஃபியூ இயர்ஸுக்கு யூஎஸ் கரன்சி தான் ஸ்ட்ராங்கஸ்ட் கரன்சியாக இருக்க சான்ஸ் இருக்குது. ஸோ அதனால் while lot of good things I spoke to you, what are the bad things? Bad things are US are not able to export their goods. Whatever is made in US can be made in China at much cheaper because US currency is so strong. Adanala US la manufacturing jobs have disappeared. All the manufacturing has gone to China. Adanala people don't have jobs. Lot of unemployment. And adanala US government has to spend more and more money as social benefits, social security, all these things. And US sort of fiscal number also goes for a toss. So many problems gets created because of, and then people don't have jobs, they get addicted to drugs. Drug opioids are a very big problem in US. Yaradha recent US poyindukna any big city you see, drug and people just lying on the payments addicted is a very, very big problem. So in the backdrop, Trump got elected and Trump said, na change panna poren ellathiyum, and I'm going to bring manufacturing jobs back to America, and I'm going to make the world pay for it. Apni aarambiche. So he started doing the tariff war. So this is the global situation we are sitting in. Idanala enna, just to give an example, this is how it's working. It's working, no? So in the year 2000, this is how the global trade was. Global trade on the, if you see all the blue color countries, they had US as the biggest trade partner, and red color countries had China as the biggest trade partner. So ninga pathingala in the year 2000 la almost 90%, 95% of the countries had US as a main trading partner. Handful of countries had China as the main partner. Now in the year 2024, almost fully red. Almost every country in the world has China as the biggest trading partner. That is the domination of Chinese manufacturing. And this is the problem which Trump wants to tackle. So adanal enna pannirkaru avaru vandaprom so many news flows. Oru naal tariff, oru naal reciprocal tariff, adutha naal back down of reciprocal tariff, 90-day pause, then China mela tariff, then 100%, 125, 200, it just goes on and on. So there's so much of news flow happening in the US, which is unbelievable to keep track of. And idnala, at least what we see now, it has become a US-China sort of a war. Baki countries sort of stance has come down. It has become a very big US-China problem. But China is not an easy country. US cannot easily win this because China is prepared for this. Our manufacturing scale, manufacturing ability is so big. US they can't win this war. So US has realized that, and konja slower they are backing down. In the meanwhile, stock markets, US markets are down. Currency is also US currency also has moved up and down, and mainly US bond yields have actually gone up, which is a very bad sign for the US economy. FD முடிய போறது, frankly I can tell you something, but no conviction. யாருக்கும் தெரியாது, because it's all decided by one person. அவரோட டீம்லயும் மற்றவங்களுக்கும் they have no idea. Okay அப்போ okay, so now what we know is US is acting alone. அவருக்கும் ட்ரம்ப்புக்கும் ஃபெட் சேர்மனுக்கும் they having a fight in the public fight, which is very, very strange. There is no coordination between US and Europe or any other country. So he's acting completely alone. So we'll see how these things pan out. But the good news is, India, in this context, India is very, very beautifully placed. Now, the macro global problems for the pesna, which is too many things happening. But India, in the context, is beautifully placed because one, our exports, component illa. For GDP, it is not a very big component like Thailand or Taiwan or Vietnam. And the countries, they depend fully on exports. Nammalukku and madri problem illa. And even within our exports to US is much smaller. Second, we have a very big domestic market. If export work alana, we can use that manufacturing or whatever it is to meet our domestic market, which is 1.4 billion people. That's a massive market we have. And third, RBI has got scope to cut rates. They already started cutting rates, and they can cut more rates, which is good for the economy. If they make interest rates lower, they can stimulate some demand. If there is a recession, globally, crude price will come down. Oil price come down, it is good for India because we import most of our crude. Again, this is good for our economy. Now, what are we doing? India as a country, we are talking to US one-on-one. Vance was here in India. Nariya trade deals, there is talk happening. And hopefully, India and US have a bilateral deal, which is good for our country. And one of the big sectors in India, IT services, where IT services, which is used in US, some $200 billion. Iduvara and the sector, there is no direct tariff or any such impact. So India is actually very, very well placed. So, what is the scenario? Going forward, what is the scenario? Most likely, this is a scenario which we can talk about. Konja slow down, globally GDP will come down. India will also have an impact. China will have a lot of extra. Yes, sir. Sure. Correct. 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 Sure. Sure. Now, I'll cover it first, but it's a very good question. IT has seen collateral damage, and I'll just cover it in a few seconds once I come to this. So, this is the scenario. India will have drop in GDP growth. 6.5% GDP growth was the expectation for FY26. It has come down to 6. Maybe because of crude oil coming down, because of RBI cutting, maybe 6 can become 6.1, 6.2. But Namluka, and the damage is only that much, 6.5 and 6.2. Compared to other countries where damage can be a lot more. And the small probability that idhanala or globally peri accident global markets correct ala, just keep in mind for you and for investors, what we are seeing today is something we have never seen. In the mother US doing business, US trying to fight with other countries, US-China trade war. We have never seen either consequences, but just keep in mind there's a small probability that we can have a very bad situation. But most likely, this is how we are expecting things to pan out. Now, how do we talk to investors and how do we handhold investors? Again, I'm coming back to the same topic spoken some time ago, asset allocation. Broader pathangna, the 5 category, large cap, mid cap, small cap, gold, actually 6 category, international equities and fixed income. Ungala clients, what is the right allocation? You decide based on the client's age, client's risk appetite, whatever it is, decide. And see where they are against it. Like somebody spoke, people were not exposed to large cap. Large cap as a category, people had just ignored. This is a good time to say, please look at large cap. It is a good place, don't ignore. International equities, people didn't have exposure to US. In the correction law, if you didn't have, please build some exposure. So make sure you have the right exposure across the different sectors. And let's have the right expectation. Last 4 years, COVID kapro, markets have given some 20% every year, 20-25% return. That is not normal. Normal returns are more like 15% or thereabouts. Keep a normal expectation. Don't give a very high return or expectation for going ahead. So I'll just quickly move through it. The large caps, we know that they are all very big companies. And actually the main point why large caps is, their standard deviation, the volatility is very less compared to other index like mid cap or small cap. This is the least volatile. When you say least volatile, na, it falls less in a market correction. For example, 2007-2008 crisis, large caps fell the least. Nifty 100, the top blue one, it fell the least, while small caps fell almost some 70% in those days. And then same thing in COVID time also, they fall the least and they recover the first. So large caps, they correct less and they come up also much faster. So this is again showing 70% correction is what small cap saw in the 2008 crisis. So I'll skip, and this crisis also, what we have seen in the last 6 months, Nifty 100 has fallen only 10%, while small cap index has fallen about 18%. So don't ignore large cap as a category. And then I'll move to why today, large caps now at this point, is because one, just 5 points, one, valuation for large cap, this is the price to earnings multiple, is in line with average. It is not very expensive, it is not very cheap, but large cap price to earnings is about 19-20 times price to earning. It is in line with long-term average, but valuation for mid cap and small cap is very high, much higher than long-term average. So we have seen the premium. This is the red line is the how much premium large cap, small and mid cap valuations are. It went to almost 35% premium. In the correction upro, it has come to 17, but long-term average is 2% discount. So it is still much more expensive. So first point, small cap, mid cap, even after this correction, is much more expensive than large cap. Second point, earnings growth. What is the earnings growth expected for large cap? It's only 13-14% earnings growth expected. While for mid cap, 20%, 25% is the expected earnings growth. So second point is, there is a very high expectation for the next 2 years earnings growth for small cap and mid cap. Next point is earnings cut. Already what we are seeing because of global slowdown, whatever is happening, earnings cut is also very high for small cap and mid cap. So one, expectation is also high for next 2 years, and two, already those high expectations are being cut. And three is that flows. There is hardly any flow which has gone into large cap category for the last 3 or 4 years. Most of domestic flows, mid cap, small cap, sectoral, thematic, and the categories. Large cap as a category has been out of flavor for last 3 or 4 years. And not just domestic, also foreign flows. Foreign flows have been selling large cap for the last time. So in all, both domestic, no flows, foreign, outflows, large cap scores very well. So valuations, earnings growth, sentiments, all the boxes are ticking for large cap. So in case you don't have exposure, please do look at large cap category. Idhila why Franklin Blue Chip? I'll maybe quickly summarize this in 1 or 2 minutes. Franklin, one of the main differentiating factors is our philosophy. Philosophy, 2 parts, our quality, valuation. Quality again, at industry level, at company level, we have our own way of evaluating. And valuation based on every sector, what is happening. So the ideal stock in the portfolio is a combination of both. Stock it has to be good quality and also good valuation. And it is not static. We keep monitoring it at every point of time. In case there's something going out from one circle, valuation jasti we'll reduce exposure. Quality kammi achna, we'll again act. Probably I'll give examples to show you how this works. This is actually how the portfolio has managed a few names. This is one of the leading food tech quick commerce company, which company it is. And the green line is the stock price. And the arrows are the trades what we have done in the last 2 years. So the stock was about 140, 150. We are buying the stock because it was meeting our quality criteria and valuation criteria. It was a good company, good valuation. And the 150 in there, the stock went to 300 rupees within a span of 6 months or 9 months. And you see all the red arrows, because the stock became very expensive, very aggressively we were selling. From almost 15 million shares, we came down to 5 million shares because of the valuation becoming very expensive. Adukapram, subsequently, the stock came down to 200 rupees and we are rebuilding the position. So this is an example of how the philosophy actually works. The other example is, this is one large private sector bank which we had in the fund. We were buying when the stock price was 1200, 1300 thereabouts. And then last quarter, they had a pretty bad results update. And the quality of the company became very weak. So on the period October, December, although the stock was down 20%, we sold fully and exited. Probably the only large cap scheme in the country to exit fully in this bank. And we were zero in this bank in the month of December. Adukapra they announced next quarter results, which is again a disaster. And from that point, the stock fell another 30-40%. So this is how the philosophy actually works, quality and the valuation. So I'll skip all these parts and I'll tell you how to, one of the questions which people have is, large cap category la alpha create panna mudiyuma mudiyada. Is it a category worth wasting your time? Is it a category worth investing? And I'm just giving you my experience in the last 3 years. What are the ways? How can we create alpha? First is the cricket terminology. Duck the bouncers, stay away from wides. Now, Rahul Dravid or interview padicha, and somebody had made this analysis of all the balls he had faced in cricket. He's faced some 20,000 balls or something. Almost 50 to 60% he didn't touch. He just let the ball go. We all know what an amazing career Dravid has got. But can you believe almost 50% he didn't even touch? By just not touching bad quality companies, bad quality businesses, just stay away from them, you can create alpha. That is the way with our philosophy, make sure under quality criteria, don't go towards poor quality company, just stay away from it. By not touching those companies itself, you can create alpha. Second, large cap category, we have 20% leeway to invest outside large caps. In the SEBI classification, we can use 20% in mid cap, small cap, international stocks. Then nalla use panna, we can create very good alpha. Last year, July, August, September, I had almost 17% exposure to mid and small cap. Today it is down to 5% because today there are more opportunities in large cap side. So if you use this well, how we have used over the last many years, there is one more way to create alpha. Third is sector. Market, so many sectors are there. And if you take a good call on which sector to invest how much, for example, consumer sector was 8% in the index. But in our fund, we are almost 13%. You take a sector call to be overweight. And that has created almost 75 basis points of alpha over the last 1 year. There are some things which has not worked, but Ella Seta, as aggregate, almost 20 to 30% of the alpha can be generated by this sector call, how much you want to be overweight or underweight. And of course, stock selection, most important. Ore sector laye, there can be a very big difference. One private bank was up 25% the last 1 year. Ade large cap private sector la, one more bank was down 60%. So you choose the right stocks within the sector, you can create very good alpha. And fifth, and the most interesting one, which will also answer your question, is this framework. STUV is a simple framework. It won't work every time, but when these 4 boxes are ticked, then you become very aggressive in any sector. It works beautifully. What is STUV? S, sentiment. And the stock la, and the sector la, and the category la, sentiment should be very bad. People should say, I don't want to go to that sector. நீங்க அந்த ஸ்டாக் பத்தி பேசினா உங்களை அப்படியே பார்க்கணும் என்னப்பா பேசுறாரு மாதிரி. You should not even, people should be hating that space. T, trailing return should not be high, it should be very bad. It should be very low returns. A stock should have corrected. The sector should have corrected. The sector should have underperformed. U, underlying fundamentals showing improvements. என்ன businessல பண்றாங்களோ அவங்க அந்த businessல there must be some improvement in data, in growth, in profits. There should be improvements. And valuation should be reasonable. இதெல்லாம் பண்ணி valuation ரொம்ப expensive இருந்தா there's no point. But valuation reasonable இருந்தா. So at any point, if all these 4 boxes get ticked, it is a time to go very positive, and that will help create alpha. Examples. in the same food tech company, it came to 50 rupees. The IPO panni and the stock, they had a bad couple of quarters. It went to 50 rupees. Sentiment was very negative. Returns was very bad. Stock went to 140, 115 IPO. It came to 50 rupees. Fundamentals were seeing some improvement because they bought a new segment. Food lender, they went to grocery. Food loan, they were showing some profits improving. And valuations were super cheap. The full company was available at some $3 billion. Today it is almost $25 billion, something like. So, on the time, if these four things are met and you go very aggressive, you made some 50 rupees became some 300 rupees. Same thing with one automobile company in June 23. This is in the tractors and some of the UV products. They had a lot of new launches. Many of you must be customers of their cars also. They are very good cars they are making. And 2023, the stock was something like 1,400 rupees. And valuations were super cheap. Tractors was doing well. And their car launches were again working well. And from that time, the stock, large cap stock, gave more than 100% return in the next 1 year. IT sector, this is what happened in June 2024, just during the elections results time. அப்போ வந்து எல்லாரும் PSUs, government companies, அந்த மாதிரி ideas they were searching for it. But at the point of time, IT sector was ticking all the boxes. And if you had gone overweight, very beautifully. And now to answer your question today, as we speak, again, I find all of this being ticked for IT sector. In my portfolio, I'm overweight the sector. Because what is happening now is, there are US companies are saying, I am not spending this quarter, but I'll see whether I want to spend next quarter or the quarter after. They're not cancelling. They're only postponing their spend. Secondly, valuations. At least till last week, I mean, ipo konjam jump aayirukku. All the large companies are trading at 20 times earnings, 5% free cash flow yield. Unga bank la kadakra FD dividend, you will get as something in stocks with a growth optionality. And then there was so much pessimism. People are saying US recession and the stocks have fallen 20-30%. And it ticked all the boxes. So that's, in my framework, that was a beautiful time. I went overweight the sector. If you see, it has helped the fund very nicely. So this is the way to create alpha in large caps. It is possible to create alpha. Please don't, I mean, I'm sure passive also would be there in your criteria, but we're all here with an objective to create alpha. We want to beat the benchmark. And if you follow these 5 things, don't touch bad companies, use the 20% limit we have very nicely, take a strong overweight, underweight call in a sector, take some very good research-backed insights, which we have. Franklin, we have a big research team, and also we use research from across the world, and take very good insights based on that. And STUV framework, if it meets, it's a beautiful time to create alpha. Last 1 year, we had about 3.5% alpha in the fund, and my intention is to keep creating consistent alpha. And I don't believe in hitting a 6 and then trying to get out. This is not a T20 match. This is a test match. It's a marathon running for 40 kilometers. The intention is to create stable, consistent alpha between 2 to 4% alpha every year, so that we justify the fees we charge, and the customer has a good experience, because we're not going to be 1 year plus 10, next year minus 8, and the madri ilka matom. Stable, consistent. Last 1 year we are doing top quartile in the fund, and hope to keep continuing with that. So I'll stop here. If there are any other questions like IT sector, I can take. Yes. Sure. So there is one chart here also. So in terms of going back to the philosophy of the philosophy fund is quality and growth. And what I've seen is that when I focus on companies which can keep growing for many years, companies which are very good people leading the company, there are 5 sectors which are usually favorable. Financial services, consumer discretionary, the cars and travel, all of those kind of things, IT services, pharma, healthcare, pharma, and some extent of consumer staples, at some point. So usually these are the 5 sectors where I have extremely lot of investments. On the other side, sectors like commodities, sectors like utilities, all the low growth valuation names, and most PSU kind of names will generally be a low portion. So I think structurally in the segments, first 5 segments is where most of the fund will be invested in. And if we see how we are currently positioned also, so this is the sector positioning in the month of March. 35-36% is financials. Next biggest sector is IT, about 12%. Sorry, next biggest is consumer, about 14%. Consumer used to be almost 17% 6 months ago, but at the time the valuations were expensive. So I brought down the exposure. It is still much more than benchmark. Benchmark was 9% or so, but brought down because of valuation reasons. Now I'm rebuilding. So financials, consumer, IT, these are the main core sectors in the portfolio. Yes, sir. Yes. Sure. US yields, right? US yields. So usually when a slowdown happens in the economy, when all this tariff is causing a slowdown, markets come down, stock markets come down, and as a corollary, as a continuation of that, bond yields also come down, because that is also a sign of economy slowing down. But what has happened this time, bond yields have gone up with the markets correcting, which is a very rare phenomenon. This can mean 2 things. One is something like stagflation. Stagflation is growing, a slowing economy, but increasing inflation, which is also a bad combination. Usually, if the economy is slowing down and inflation comes down, then central bank will come and say, I'm cutting rates, then you can restart economy. But if inflation is going up, you can't be that aggressive also. So that is first thing. Second, and more unknown, is that US there are a lot of hedge funds and financial entities which trade on US bond. So because of this price movement, maybe somebody is having their trading book exposed. They had to book some losses, or maybe some Chinese bond holders are getting out of US. They are saying, I don't want to hold US bonds. So they're selling very aggressively and getting out. So that is the second reason. But whatever the reason, we don't know what is the exact reason, but this combination is not good, and if this continues, it can cause a very big problem. So we have to just keep an eye on it. You know the answer as well. It will take 5 years to build anything. So they can't. Obviously, he's trying to win a battle he can't win, and it will act inflationary. And that is why the whole question of how does this make sense comes in. I think 1 or 2 weeks ago, there's a beautiful article in Mint by Vivek Kaul calling this stupid. Talk about China, it stops in this thing. They have their bot somewhere. So whenever, coming back to this thing, this is not a battle they can win. And there's nobody knows who's advising Trump on all of this. So that is why the strongest message to Trump has been, 1, markets correcting, because American investor has got a lot more in equities than Indian investor. And because of that, Trump's popularity will come down. And 2, US bond yields going up, which is also a sign, because they have $36 trillion of debt. And if the yields goes up, the amount of interest payments they have to do, they can't afford it. So they need the yields go down. If they go, they can't make the payments. Second largest. Japan is largest. So out of 36 trillion, about 7 trillion is held, 7 or 9 trillion is held by foreigners. 1 trillion is Japan, 800 billion is China in that. But most likely China is the one who is selling. Japan probably is not selling. Yes, please. Yeah. Yeah, so again No, he's not said that. But see, he can't reduce cost by not outsourcing. In fact, when there is a recession, but I don't know. Okay, but sir, India has got how many millions of people working on this coding and thing? They don't have. America doesn't have that many people. Infosys can come to campus Satyabama University and take 5,000 people. America, where will they go? 5,000 people, one full city. They can't, they won't get so many people. It's not, America cannot do that. And in fact, 25 years of listing TCS, even in 2008 crisis, there was never a drop in EPS. IT companies, even with a recession, more business comes to India because they, American companies say, I want to cut my cost. Then more business will come to India. So usually this is a good time to look at the sector.
So
that is in my approach.
So we'll take questions. We'll take questions.
Like I said, the base cause there is US recession, but a short-lived recession, maybe for next 1 quarter or 2 quarters. And then because of the yields, hopefully the US yields come down, Fed starts cutting rates, and next year we have some resumption going back. The Fed can cut quite a bit. And some normalcy comes in the Trump's thing. We reach a China-US agreement where US buys something from China, but not at such a big tariff level, at the lower tariff level, and China gets something in return. So we have to get some in-between solution. That is the base case.